You are listening to Uranium Spotlight on Tuesday, November 12, 2024. Brought to you by Purepoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, Purepoint is investing in Canada's uranium future. And now your host, Chris Frostad.
This week on Uranium Spotlight, the spot price continues to slide. Trump's support of uranium remains in question. The EU looks to ban Russian uranium, and Cameco delivers a strong Q3. Last week's uranium market showed notable spot activity driven by a softening in offer prices, rather than the election-related bump in equities. The spot price declined from $78.50 to $76.50 per pound, triggering buying interest midweek as prices dipped. Early in the week, most buyers stayed on the sidelines, with the price slipping 50 cents on Monday and again on Wednesday. By Thursday, however, multiple buyers, including intermediaries, financials, producers, and utilities, entered the market, closing 5 spot transactions and causing another 50-cent drop in the price. Friday's bids and offers ranged between $76 and $77, with 2 additional transactions recorded, ending the week at $76.50. In the term market, formal contract activity has remained relatively quiet. However, a U.S. utility recently issued a request for 1.5 million pounds of U3O8 due for delivery between 2026 and 2030, with offers expected by November 15th. Additionally, a non-U.S. utility secured a midterm contract for delivery in 2026, while another entity concluded indicative discussions for enriched uranium product reloads. Meanwhile, some utilities are actively pursuing quieter off-market discussions with preferred suppliers, and a non-U.S. entity is exploring supply options to support future small modular reactors. In summary, the spot market saw a brief uptick in transactions as prices softened, while the term market remained relatively subdued, with select utility requests mostly focused on delivery beyond 2026. Donald Trump's re-election as U.S. president adds a layer of unpredictability to the future of nuclear energy, particularly for investors in uranium and advanced nuclear. Trump's previous term showed him as largely pro-nuclear, supporting projects like Vogtle 3 and 4 and advancing initiatives like the Partnership for Transatlantic Energy Cooperation. His backing of the Nuclear Energy Innovation and Modernization Act also created pathways for regulating advanced nuclear technology, a positive move for the industry. In August 2024, Trump reaffirmed his pro-nuclear stance, promising to greenlight new drilling, pipelines, power plants, and reactors from day one of his administration. Yet some aspects remain uncertain. Trump has aligned himself with Robert F. Kennedy Jr., an environmental lawyer with a history of anti-nuclear positions, including efforts to shut down the Indian Point reactor in New York and recent calls to end nuclear subsidies. Meanwhile, Elon Musk, a likely appointee in the new administration, has voiced support for nuclear, but is also pushing for $2 trillion in federal spending cuts. Musk's stance on nuclear remains promising, but with such an ambitious budget-cutting agenda, it's uncertain where those cuts will fall. Adding to the mix, Trump recently expressed reservations about nuclear reactors on a podcast, saying they are getting too big, too complex, and too expensive. This may reflect his preference for small modular reactors like NuScales, which aim to reduce construction costs and timelines by using more manageable advanced designs. During his first term, Trump backed NuScale's SMR project at Idaho National Laboratory, though the project faltered under the Biden administration due to a lack of customers willing to purchase its carbon-free energy. While SMRs offer promise, their impact on nuclear demand is minimal, as they require less fuel and are not expected to reach high volumes anytime soon, meaning they won't drive uranium prices significantly in the foreseeable future. Investor sentiment around Trump's second term leans bullish for advanced nuclear. Following Trump's victory, NuScale's power stocks surged by 14%, with other key players in advanced nuclear seeing similar gains. This confidence may stem from Trump's history of favorable policies, along with Musk's inclination towards advanced nuclear. Should RFK Jr. prioritize climate goals, even he might align with advanced nuclear, seeing it as cleaner, scalable solutions. However, for uranium investors, advanced nuclear alone won't bring substantial gains in uranium prices. The major factor for uranium demand hinges on whether Trump's administration will support significant new builds of conventional reactors or extend the lifespan of the U.S.'s existing fleet, the largest in the world. On these points, Trump's stance remains unclear, leaving the door open to speculation and caution among uranium investors. Ultimately, while Trump's second term may boost innovation in advanced nuclear, the potential for uranium prices to rise significantly rests on whether traditional reactors see substantial new investments or extended operational life. Investors would do well to keep an eye on these developments as they will shape the demand landscape for uranium in the U.S. The European Union is actively considering a ban on Russian uranium imports, but there's one significant holdup: Viktor Orban. Once again, Orban is defending Russia from European sanctions, potentially blocking another opportunity to limit Putin's influence on the EU energy supply. Across Europe, political leaders are increasingly vocal about nuclear restrictions and are pushing to add them to the next sanctions package, the 15th since the Ukraine war began. This latest measure, expected to be implemented next year, aligns with broader goals to reduce European dependence on Russian energy. For EU members who strongly oppose Putin's actions in Ukraine, the sanctions not only weaken Russia's financial capacity to wage war, but also gradually shift Europe's reliance on energy away from their adversarial partner. Orban's resistance, however, isn't purely ideological. Hungary is heavily reliant on Russia's state-owned nuclear energy company Rosatom, which has been contracted to expand the Pact's nuclear power plant, Hungary's primary source of nuclear energy. Orban is keen on keeping Rosatom engaged to ensure that PAX remains fueled and operational with steady access to Russian nuclear fuel and services for years to come. While EU officials are working intensively to reach a compromise, the outcome may fall short of the original vision of eliminating Russian nuclear fuel imports. Instead, the proposal might only restrict Rosatom from constructing new nuclear plants or advancing reactors in the EU, leaving Hungary and other countries reliant on Russian fuel without a near-term alternative. However, several EU countries are already making strides towards independence from Russian nuclear fuel. This ongoing shift suggests that regardless of Orban's stance or the specifics of the EU's sanction package, the broader trend is clear: a growing divide between East and West in nuclear fuel sourcing. Countries like Russia and China are increasingly reliant on each other, while the US and EU countries look elsewhere for their uranium and nuclear fuel needs. This realignment could signal long-term implications for global uranium trade, making the coming year one to watch for investors in uranium equities and commodity markets alike. As an investor, this divergence in nuclear fuel supply chains has significant implications. With Russia moving to deepen ties with China and the West looking to secure stable, non-Russian sources of uranium, we could see lasting impacts on uranium demand, prices, and supply routes across the globe. A small but vocal group within Germany's main opposition, the Christian Democratic Union, or CDU, has officially requested a feasibility study on the potential revival of the country's nuclear power plants. This request, supported by members of the closely aligned Christian Social Union, or CSU, is a response to what these leaders call an ideologically motivated and misguided decision by Chancellor Scholz's government to close Germany's last remaining nuclear plants in April 2023. Their criticism points to the timing of the shutdown, which coincided with an energy crisis exacerbated by Russia's invasion of Ukraine. While these CDU and CSU parliamentarians press for a review of the nuclear phase-out, it's worth noting that Fritz Merz, leader of the CDU, stated at a conference last year that he considers the phase-out decision final. His remarks suggest that reviving nuclear may not be a priority for the party at large, even as some members advocate for a rethink. Adding complexity to this landscape, the German government's coalition, composed of the Greens, Free Democrats, and Social Democratic Party, collapsed in October over budget disagreements, fueling speculation about Germany's political future. The CDU is now leading in the polls, and with a potential election in January, the debate on nuclear power could take on new urgency. For investors, this shift in German politics could have broader implications. If the CDU returns to power and reopens discussions on nuclear, it may signal a renewed openness towards nuclear energy in Europe's largest economy, potentially influencing both uranium demand and European energy policy. Additionally, as Germany continues to grapple with energy security, any change in policy could create ripple effects in the uranium market, especially if other European countries view a nuclear reactor pivot as a reason to revisit their own nuclear stances. This evolving political scene makes Germany a key watch for anyone following uranium equities and the commodity markets. The outcome could hint at Europe's future energy mix and its commitment to nuclear energy, factors that could ultimately support or challenge the bullish narrative around uranium demand. Cameco's Q3 2024 results show strong operational performance and improved cash flow amid favorable market conditions. CEO Tim Gitzel emphasized Cameco's selective contracting and production strategy to capitalize on rising uranium demand. For 2024, the company raised its uranium production target to 23.1 million pounds, driven by robust output from McArthur River, Key Lake, while lowering JV Inca's forecast due to acid supply issues in Kazakhstan. Financially, Cameco's revenue increased by 25% to $721 million, with a 43% boost in uranium production, although net earnings of $7 million were impacted by purchase accounting related to the Westinghouse acquisition and delayed JV Inkai sales. Adjusted EBITDA grew 32% to $308 million. In recognition of sustained industry strength, Cameco's board declared a 16-cent dividend per share, with plans to potentially double last year's payout by 2026. With $197 million in cash and a $1.3 billion undrawn credit facility, Cameco is positioned for strong cash flow and prioritized debt reduction. Cameco's uranium segment reported increased prices, production, and contract coverage, while Q4 is expected to bring stronger contributions from Westinghouse. Rising support for nuclear energy underpins Cameco's outlook, cementing its role as a leader in high-quality uranium assets. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by Purepoint Uranium Group. Purepoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.